So, kicking off the budget session of the Parliament, India's Finance Minister Nirmala Sitharaman tabled the economic recovery and the economic survey in the Parliament. The survey is the flagship annual document that reviews the state of the economy, and it has projected India's GDP growth to be about in the neighborhood of 8 to 8.5% for the forthcoming year, while the current year's GDP growth has been projected at about 9.2%. Now, amongst other projections, the survey has also indicated that India has more fiscal space to ramp up capital expenditure, while challenges remain for the economy on the macroeconomic front. Now, Asia's third largest economy, India, is fighting a spike in the number of COVID-19 infections and also the inflationary pressure that is on the country. However, the survey points out that all macroeconomic indicators show that Asia's third largest economy is actually well placed to face the challenges that India confronts. And amongst the positives working for the Indian economy are improving farm and industrial output, growth while vaccination progress is, of course, a major stability indicator. And also India's ranking in the Global Innovation Index has climbed by as much as about 35 notches from the 81st position in the year 2015-2016 to the 46th position. And some of the biggest risks to the Indian economy remain, of course, the inflationary pressures backed by high crude prices and also some pretty sluggish domestic demand. This, of course, is going to be one of the key changes that the government will have to address in the coming days. Why is the demand collapsing? The government has been resorting to addressing the supply side issues, but the demand side issues will have to be addressed by the government. The sooner it does, the better. And another aspect which the government will have to look at is in terms of the COVID-19 infections and how to ensure that further waves of infections, if they happen, do not damage India's economic prospects. And also private consumption, accounting for nearly about 55% of the GDP, remains weak amidst the rising levels of household debt. The growth projections are all based on a number of factors, including a normal monsoon season and also an orderly withdrawal of global liquidity by major central banks. The survey also assumes the crude prices will be in the range of $70 to $75 per barrel for the economic growth to continue. And India's economy has been on the mend after the government lifted mobility measures in the month of June to curb the spread of the coronavirus after contracting by almost about 7.3% in the previous fiscal year. And after a surge in the Omicron infections early in the month, many private economists and the International Monetary Fund have also cut growth estimates to about 9% from an earlier estimate of almost about 11% before. WION is now available in your country. Download the app now and get all the news on the move.